Good morning and welcome to the Totally PLC investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time by the Q&A tab situated in the right-hand corner of your screen. Just simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company can review all the questions submitted today and publish responses where it is appropriate to do so. Before we begin, I'd like to submit the following poll. And I'd now like to hand you up to Simon Stillwell, Non-Executive Chair. Good morning to you, sir.
Thank you, Ali. Thank you. Welcome to our results presentation. We're going to cover the period to March 2024, and I'm joined today by Wendy Lawrence, our Chief Executive, who will cover our operations and strategic update. And for the first time, Lawrence Goldberg, our Director of Finance, will cover the financials. We'll run through our presentation and then we'll take questions at the end, unless, of course, it's pertinent to the section that we're covering at the time. So really, by way of introduction, the backdrop to this is that there is a real need and therefore a big opportunity for the independent providers to support the NHS. And therefore, I believe we're incredibly well positioned to facilitate that. Last year, as we will cover in this presentation, was a year of significant change to improve our proposition and to make us more efficient. And I've seen that with the development of our new leadership team and their focus. And there's also the new efficiencies within the business. We're going to talk about the changes to our operational and corporate structure to make sure that we are absolutely fit for purpose. We've refreshed the board in the period, and I'd like to welcome Bob Forsyth as our new independent non-exec director and audit chair. But I would also like to thank Mike Rogers for the last 9 years in his service to the business. We ended last year and we've started this year with greater stability, and that has positioned us well for organic growth. Historically, we've talked about a buy and build strategy, and now it is very much about getting the very best from the existing business and taking the opportunities that we see in front of us. So with that, I'll hand over to Wendy and look forward to taking questions towards the end. Thank you.
Thank you, Simon. Running through the presentation, I think everyone knows it was a challenging year, and we spent that time focusing on what we could control and making sure that we had absolute control. So we did a comprehensive cost and structural review. We were very much geared up for growth. We saw all of the waiting lists growing. We saw demand for services increasing, but we also saw a whole system where it was very difficult to progress. So we made sure that we could control the controllables and ensure that we were there to meet the future needs of the business. So as revenue reduced, procurement was delayed, we made sure that end to end we did that. And that was all the way from floor to board, and now feel very positioned for what the future brings to us. So we had a focus on efficiency, quality and accountability. I think it's very important for people to note that during that period, it wasn't a case of stopping, redoing what we needed to redo and starting again. All services continued throughout that period, and there was no dip in quality, and that all of our services remain as rated good by the CQC, and that's including recent visits too. So we're fit for that future growth, and we also have a very incentivized senior team who are all pulling in the one direction to make sure that what we do is deliver on everything that we are required to deliver upon, which is a theme that you'll see me talk about as we go through. So going back to operational progress, I've already mentioned the CQC remaining as good. We've enabled more than 2 million patients to access our services and our care. So even though as a business we've actually shrunk in revenue terms, we're still seeing lots and lots of patients. We've mobilised new and expanded existing elective care, ensuring that we get the patients in for treatment as quickly as we can to the service that we'll deliver. We remain as NHS England's 111 resilience partner. We are the only resilience partner, and therefore we have a national footprint across England delivering 111. And not to be forgotten, we've also mobilised the largest contract in our fitness and wellbeing arm of the company, EFP, Energy Fitness Professionals, who continue to do very, very well and whose pipeline continues to grow. We've also spent a lot of time piloting new ways of working. We've recently published a paper that shows a different way and an innovative way of working with ambulance services, managing category 3, 4 and 5 calls, not only to ensure that patients access the right service the first time, but also to provide them with a cost-efficient model, which has gone well. We've maintained our Cyber Essentials Plus accreditation, which is really important for us because it underpins us in so many ways for quality going forward. And as the system eases, it is an absolute essential for us as a provider of care to be able to demonstrate that. So again, you'll see in all of the financial figures that there has been a reduction in our internal overheads and managing our own costs, which has resulted in a new team led by one operational team across all of the operational aspects of the business. So whilst we still talk about elective care and urgent care, that is under one leadership team. And again, very focused on performance and delivery, right down to contractual level and right down at user level. I'm now going to hand over to Lawrence, who will take you through some of the financial highlights.
Thank you, Wendy, and good morning to everyone. It's good to be here talking to you today. So I've been leading the finance team since February of this year. So the results which you can see on the slide there are consistent with the results which we put out in terms of our trading statement a couple of months ago. The reality is it's been a tough trading year. Can't shy away from that. And therefore, what you see in front of you in terms of the decline in revenue, the decline in cash, and the decline in profit after tax are a result of that. Two main factors for that. One is the non-continuation of contracts, such as the one in North West London, which we talked about before. And the second is that there has been, to some extent, a level of inertia in terms of our customer base and the NHS. So those things combined lead us to the results which you've got in front of you. I'd like to pause there and then put another perspective on this. So the reality is what we've done as a business is focused in terms of making sure that, as Wendy's alluded to, we put in place the right operating structure and reduce cost base so that we are fit for the future. And what that means is our overhead costs during the year have reduced by 2.2 million. Now, if I annualize that, I will get to something like about 3.5 million reduction in that cost base. Not an easy thing to do and not done lightly, and it does impact ex-colleagues of ours. However, I think that's the sort of backdrop to these financial results. What also comes out is the second half of the year ending March of 24. We have seen that return to profitability. It is a higher profit half year and a higher cash year than the previous half year. And I think those are things which need to be drawn out in terms of these financials. Perhaps if I then sort of give you a little bit more flavour for what we've been working on then. So I'm also pleased to say that as part of the work which I've been doing since over the last few months, is we've been able to agree indicative terms with our current banking partner, NatWest, which will renew our revolving credit facility for a further 2 years. It's at a slightly reduced level of 3.5 million, and that is to better reflect the size of the business which we currently are at. Another important thing to point out is that the restructuring which we've undertaken has not only given that better company-wide focus in terms of our operations, but it's also brought in a workforce management solution which will give us better ability to operate going forward. So not only have we reduced costs, we've also invested time and effort in terms of future capability. Bit of a technical point, those of you who are familiar with the business, you would have seen that we did have a carrying value of intangible assets for the last few years. That has been fully amortized now. So in terms of our going forward financial position, it will be that will no longer be on our balance sheet as it's been fully amortized. I think looking to the future as well, the important point to recognise is that some of you who will have been familiar with the business will see that we do have quite a number of trading companies. We're in an active programme in terms of simplifying our legal structure so that, once again, that will bring in more efficiencies and cost savings as we go through. Simon's already alluded to the new audit chair, which, again, very pleased to be started to work with.
Thank you, Lawrence. So if I just take back and just run you through some of the vision and strategy, we remain firm on the vision and the strategy. I don't think there is any reason to change that. There is an absolute need for our services across the UK and Ireland, and I hope that you will recognise that in the last few weeks post-election we've seen an easing in terms of news that we've been able to talk about as commissioners regain confidence in being able to look to the future in terms of their priorities. For those of you that have joined these things before, those pillars that you'll see in front of you are very, very familiar, but it is for us now managing what we know we can manage, keeping an eye on all of our costs going forward, making sure that we remain that trusted partner of choice, making sure that the quality of what we do doesn't waver, ensuring that the operations are efficient and effective, and again, managing costs as we go forward. This isn't a one-off exercise. We had to do the exercise last year and running through from floor to board, but that will continue, and the systems and processes that are in place now will ensure that costs are managed proactively as we go forward. We will invest in our workforce to make sure that we remain a good employer and an employer of choice. We've just undertaken our annual staff survey, and the engagement rate from that has much improved. I mean, I think it's just over 60%, which was fabulous. And we do rely on our workforce so much. The identifying opportunities as they come through for the business. We've spent a lot of time analysing data out there in terms of waiting time, performance targets, to make sure that we enable that commissioners know about us, they know what we can do, and they know the cost savings that we can deliver for them, and that, you know, they think about us when they have a need. So I think what we have seen is certainly the other side of the election. It's still early days, but things are beginning to ease. Waiting lists continue at an all-time high. In England alone, I think the last stated figure in May was 7.7 million patients waiting. We again, through the delivery of insourcing and outsourcing services, are ready. The quality of what we do speaks for itself. The new government is committed to creating an NHS that is fit for the future and at the cutting edge of healthcare. So we make sure that everything we do is done well. We've talked about innovation and the use of innovation. We're very attractive to tech partners because we hold a lot of data, and obviously we work with the NHS on ensuring that data is protected, but it's also ways where we can work with tech industry to actually look at the art of the possible, looking at AI and learning and what we can do, and hopefully we'll be able to talk to you a little bit more about that in the future. We're expecting revised guidance from the NHS in terms of what their short-term targets are and how that will flow. And there is also an ongoing commitment from them to use the independent sector to enable them to meet whatever performance targets that they set. Mentioned contract wins, recent signs and news that we've been able to put out to you. I hope that you've seen that, and I hope you will see this as an easing. It's certainly good news for us. And going forward, and I hope that we'll be able to continue the release of information for you. So we know that we're part of the solution. We know that we're there to provide new initiatives, and that's what our goal is going forward. Supporting the recovery of the NHS, I've touched on some of these, so I won't go through line by line, but we remain NHS England's sole resilience partner, and again have that national footprint of the provision for NHS 111. We rapidly mobilise all insourcing and outsourcing contracts to support the reduction of waiting lists. It normally takes us 2 weeks to actually get a new contract going and patients going through and being treated. We do work 7 days a week in some hospitals using their capacity when it comes down to insourcing, and with others, obviously, weekends, out of hours and bank holidays. Fully outsourced services as well, we do provide those, and we do use capacity in other hospitals, and we will continue to do so. We've also delivered successful pilots with the ambulance service. So whilst we've been getting our own house in order and managing our own costs, we've also been innovating in the services externally, and recently published a paper on work that we've been doing in Yorkshire with the management of category 3, 4 and 5 999 calls, and bringing them into our services to make sure that the patient enters the service in an appropriate manner and has an appointment that is appropriate for them going forward. That has already been shared nationally with other ambulance trusts, and we're beginning to see the seeds of interest from that. So it's all actually moving in the right direction for us. A little bit about corporate wellbeing. Although it's a small part of our business, energy fitness professionals continue to grow, and since we acquired them, have done so. They've secured their largest contract to date during FY24, valued at £1 million over 5 years, plus some equipment, and a new contract which has just been secured at a prestigious location in London that is now in mobilisation. And there's just a few numbers there for you, so you've got an idea of the size. They run 61 gyms on behalf of corporate customers and more than 13,000 members. The pipeline for new business for EFP is also increasing, which is quite interesting as employers start to get people back to the office. So by no means least, the outlook for FY25. It's been a tough year, but we've made sure that we've controlled the controllables, and we will continue to do so. It wasn't a one-off exercise. We now have complete visibility of our own costs. We now have systems and processes in place that allow us to make the right decision about what we're doing. We report down at contract level on performance so that everybody has visibility on how that contract is performing, and where the peaks and troughs are in that. So we've reinstated guidance, which I hope that people will take that as our increased confidence in what we're doing. The contract wins and extension announcements, we believe, shows an easing of the hiatus that we've seen in recent months. And we know that there is increasing demand for all of our services wherever they sit. The organisation is absolutely focused on delivery with one leadership team, and I can't tell you how important that is to have it and everybody pulling in the same direction. So renewed internal confidence in what we're doing, and we know that our models are not only effective, but they're also efficient and can deliver savings for the NHS. We expect improved performance during FY25. Lawrence has already touched on that. And we have included in the RNS our outlooks for full year 25, revenues to be circa 85 million and EBITDA to be not less than 3.5 million. We've already had questions asking us if that's not a little bit conservative. What we need to do is make sure that we can deliver, and we're absolutely focused on delivery. So I hope that you will take those clear messages through. In summary, just summing up for you at the end, the uncertainty is easing as the new government sets out its plan for recovery. You will have seen that in RNS, and we hope to continue to do that. We will make the most of every opportunity to strengthen the business. We will continue to drive out cost and create efficiency and build accountability further. But I can assure you that what we've been doing over the last year has made sure that we have absolutely got our house in order. We will support healthcare colleagues as an integral part of whatever their solution is to the problems that they've got. And we have reinstated guidance with the revenues and EBITDA that we've published today. So can I thank you all for attending today? And I do hope that you have found the presentation useful. And that's the end of the formal presentation before we move into questions.
Perfect. Thank you very much for the presentation. Ladies and gentlemen, please do continue to submit your questions just by using the Q&A tab, which is situated on the top right-hand corner of your screen. But just while the company take a few moments to review the questions that have been submitted today, I'd like to remind you that the recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. As you can see, we have received a number of questions throughout today's presentation. And if I could just hand back to you just to read through those questions where appropriate to do so, I'll pick up from you at the end.
Thanks, Ali. So the first question is around innovation, and the question is that the RNS states there will be an increased focus on innovation to develop new solutions. Can we elaborate on that? Just to be clear, it was covered in the presentation. We were talking about a trial working with an ambulance service and the publishing of a white paper. That is one clear example of the innovation we're talking about. And there's other joint venture partnerships that we're in early stages of working with. And again, Wendy talked about technology providers who are looking to work with us to try and implement their solution. So the second part of the question is, does it imply any investment in IT? And the answer to that is no. It's really people time. There's no big CapEx program to invest in these projects. It's really in partnership. And so there isn't any budgeted CapEx in the current year. The second question is there any scope for gross margins to improve? Which we will hand over to Lawrence for that one.
Yeah, no, thank you for that. And I'll also take the question around further ongoing cost savings. So yes is the short answer. So the guidance which we've put out there in terms of an EBITDA of not less than 3.5 million on a revenue base of 85 million is clearly a drive towards improving profitability in terms of that revenue base. We will work all lines, whether or not that's our overhead base or whether or not that's our cost base in terms of delivery of the service. And we've already alluded to the fact that we are implementing a new workforce management system. So all of that leads to more efficiency and effectiveness, which will lead to improvement in costs, which could either be in our overhead base or in our gross margin. But yeah, very active program to work on both of those items.
Thanks, Wendy. Yeah, so the next question, which Wendy can pick up, is around how can the company improve on the 60% engagement on the recent staff survey? This is very much a people business, and so we'd be interested to understand how that engagement can be increased and how future success of the business can be built.
Yeah, I mean, the 60% headline figure of engagement is a really good figure. What we're doing now is taking apart the feedback that we got in that staff engagement survey, and plans are being put in place for how we can address the things that were raised. We've invited members of staff to join smaller groups to actually talk about what will make a difference. And so what we will now be doing internally is taking all of that feedback, discussing in smaller groups, and then ensuring that everybody knows what we're doing about it and when we believe that we will make a difference. So this is an ongoing thing. It's not just a one-off. It's actually learning from that and going forward.
Thanks, Wendy. The next one's for you as well, which is around. We just need to go back down a bit.
Oh, sorry. I've gone too quickly here. Do apologise.
So the question is, are you able to provide better visibility of when you are expecting the NHS to provide further updates on their plans post-election? So I think.
Well, the easy answer is no. I mean, I think what we have seen is we've seen an easing of the situation with commissioners where decisions are now being made. And, you know, you read the headlines the same as I do about what the government is planning. So I don't think they'll leave it long. I think they want to ensure that they're seen to be doing, you know, things as we go forward. I think I've also missed the question above, haven't I?
That's one. So I think the next question is one for Lawrence. It says, why do you expect revenues for the year ending 25 to reduce from 105 to 85 million? And given that, notwithstanding cost savings, you must be focusing on higher margin business to deliver the projected EBITDA.
Yeah, no. So there's probably two aspects to this. So the revenue reduction is driven by one, the historic non-continuation of the North West London and Staffordshire 111 contracts. And And what that then leads to is a full year impact in the year FY25, because those were ceased partway through FY24, which is ceased, so we get the full year impact. We also can't get away from the fact that there has been a level of inertia in terms of our customer base, in terms of new sales and new business. So therefore, the 85 is a very measured position given those factors. But what I then need to allude to is what we've then done, and when Wendy and Simon have called this out, is we've then taken the opportunity to look at our process, procedures, and cost base in the interim, so that we are ready for this year, which we're entering. Yes, absolutely, we are focusing on those higher margin contracts, but not only that, we will work with all of our customer base in terms of the services which we provide, in terms of that. So in reality, I think, as I alluded to, the second half of the year just ending FY24, we had that profitability returning on a modest level. And then what we're looking at then going forward is a continuation of that trend, some further cost reductions, which will flow through, plus a focus on improving our margins.
Thank you, Lawrence. We've got a question a quick fire question. How long is a typical contract?
There's no easy answer to this one, because we work in so many different areas of the NHS. An urgent treatment centre contract tends to be between 3 and 5 years. We're not seeing many of those out at the moment because of the inertia. On the framework agreements for the reduction of waiting lists, it can be a specific contract that says, can you take that specialty, say gynecology, and can you remove 200 patients, and what would it cost, and how can you do it? So that may be a few weeks, through to the longer term contracts like we released on Salter Group. So there isn't a one size fits all. It's very different depending on who the commissioner is and what the service is, I'm afraid. I'm not trying to not answer it, but that is the honest answer.
Thank you. The next question is around what are the risks posed by the new government and its approach to using independent healthcare businesses?
Well, going back to pre-election, there was an all-party agreement that the independent sector were a vital component of actually getting the NHS back up and working efficiently. So Labour have recommitted to that since being elected. So I think for organisations such as Totally, there very much is a role to play for us and our partners of independent sector providers.
Okay, let me just scroll down on to...
Yeah. Okay.
Okay. There we go. So the question is, you seem to have abandoned your buy and build strategy after raising a lot from shareholders. Now you are trying to finally sweat the contracts. What confidence can you give us that this is going to work? So it is a change of direction. There's no doubt about that. And yes, the company has undertaken a buy and build strategy, and that the integration, the final part of the integration of those businesses, I think, has now taken place. What we're really doing is getting the best from those businesses now. So we have brought, as Wendy and Lawrence have talked about, we've brought those businesses together. We've got them under one operational team, and we are getting the best from those businesses. The thing that I can point to that hopefully should give you confidence that that's going to work is the improved performance in the second half of the year. That is the first tangible evidence that this new structure is delivering monthly positive EBITDA contributions, and that's the thing that I'm focused on, is making sure that there is a return to sensible levels of profitability, because I don't think we can seriously look at acquisitions until we've absolutely got the very best from the existing business. The next question is, who is responsible for technology innovation implementation?
That sits with John McMullen, who is our medical director and sits on the board as looking at innovation. But obviously, this isn't one person alone. So he works very closely with the other people in the senior team to ensure that what we're doing is correct. And obviously, anything that we want to do on innovation and tech, we work side by side, hand in hand with NHS England, so that there are no surprises on that and that we can get that through correctly. But John has the accountability through to the board, and that's reported on monthly every time we meet.
The next question is around margin, which I'll take part and Lawrence can take part. And the question is, even after the cost savings, the EBITDA margin is poor. What would be a good margin, and can you translate the EBITDA to pre-tax? So I think the first part is we're working on the margin. If you look back historically, peak margin, EBITDA margin was around about 6%, and that is something that we're certainly looking to return to over time. And in terms of following it down from EBITDA.
Yeah, sure. So therefore, we have very low capex in the business as it currently stands. So therefore, we're very much a people business. So therefore, you will see that we will have some amortization of the software which is in place to run our business, and we will have some depreciation of the standard laptops and such in terms of that depreciation. So you'll see in the numbers that there's discrete items for that. What you'll see in the year just ended in terms of March 2024 is that we specifically amortized the value of previously acquired contracts. That was the last time that we will do that in that year, and those are now fully amortized. So going forward, we've got a fairly straightforward relationship between the EBITDA which we are earning, the straightforward capex which will be involved in terms of our hardware and software, and then that will come through to our pre-tax position. At the moment, we have some carry forward losses which we can offset against tax. So in the outturn year coming to ended March 2025, then we do not expect at this stage to have a tax charge in the year to March 2025.
Thank you, Lawrence. And the next one is around the new banking facilities, which we were delighted to work with our existing lender. And the question is, are you confident that the reduced RCF is sufficient to meet the cash needs, or will there be a requirement to come back to the market? I think probably two answers apart from Lawrence. I think the first thing to say is that we had a very open and extensive dialogue with the lender. There is no requirement for equity to stand alongside the new facility that is in place, and the modelling of the business is such that the amount that's been offered and that we will continue with is sufficient for the company's needs.
It's a straight yes on the answer to that question. We've gone through a rigorous process in terms of that, and that gives us the borrowing required with an appropriate level of headroom. So yeah, very much a straight yes on that.
Just for clarity, that's a straight yes on the first part of the question and a straight no on the second part of the question on requiring equity.
Correct.
Yeah, thank you.
Yeah, worthwhile clarifying.
Very good. The next question, there is much talk about AI. Is the company looking into how AI can be utilised effectively in the business? That's another straight yes question. There is no doubt there are lots of medtech and health tech companies out there with new, interesting and effective solutions. The challenges for them is being able to access a patient base where they can demonstrate their effectiveness. And we are certainly talking to them, because if we can ultimately achieve our aim, which is to improve the healthcare position, then that would be a wise thing to do. So yes, there's no great detail that we can give at this stage, but that is something certainly by the interims and by the end of this current financial year that we'll be able to give a bit more detail on.
I think that's probably an end to the questions that we can answer on here. what we will do is review all of the questions afterwards and obviously publish them back on this site.
Brilliant. Well, thank you very much for your questions. Thank you very much for your time. As Wendy says, we will respond to the individual questions that we can, and we very much look forward to updating you as appropriate, bearing in mind the changing landscape of the NHS and what they're seeking to achieve under this new administration. And we will also be back around November time with the interim. So thank you.
Perfect. Simon, Wendy, Lawrence, thank you very much for updating investors today. Could I please ask investors not to close this session, as you'll now be automatically redirected to provide your feedback in order the management team can better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of Totally PLC, we'd like to thank you for attending today's presentation, and good afternoon to you all.